Today, we're going to go over the buyer's guide to purchasing a home in Long Beach. We're going to dig a little deeper into Long Beach. I know we have a few Long Beach people on the call today.
So most of us have different reasons that we want to purchase a house, purchase a condo, buy a home, but we find there's typically five reasons that really do cover everyone. And one is equity. You want the opportunity to build equity over time. So that's the amount you owe versus how much it's worth. And a lot of that has to do with appreciation. You want your home to increase in value and you hope that it does, right? We all so we're all trying to have that crystal ball. So if it increases in value, then you get to sell it later and use that money to move into something a little bit different, hopefully better. There's also some really great tax benefits. We actually do another webinar that covers that. I'm not a CPA, so I'm not going to dive into that, but you should join that webinar. There'll be a QR code at the end where you can see the schedule. And so there's some tax write-offs that you can do, save some money with Uncle Sam. And then there's always upgrades. When you're living in a rental or you're living with your parents, whatever the case may be, you can't really do the things that you want to do to your home. In a rental, you can, but you're not going to make that money back. In fact, it may cause you to lose money. It may cause you to lose your deposit. So in your own home, you can do those upgrades and it will actually, if done well, add value to the home in the long run. And then lastly, we have the investment portion of owning a home. Perhaps you decide instead of selling that home to move to another one, you keep it and use it as a rental property. Perhaps you have a few rental properties. And again, you're using it's a forced savings account. So either way you slice it, it's a good investment to buy a home or a condo. So this is the home buying process. These are the steps you're going to take to get started on that process. And step number one is to build your team. This is really important. Before you go out and start looking at open houses or start scrolling Zillow, you want to have the experts to guide you along the way. And that's typically going to be your real estate agent and your lender. Hopefully that you can choose from the lovely people here to be part of your team. We'd love to be part of your team. Number two, you need to check your score. Your credit score has a lot to do with the amount of money that the bank will lend you and at what rate. So it's really important to check that so that you know if there's anything on your credit report that maybe you didn't know about. We just had this happen with a client of ours. They found out something from a long time ago that's not even true, but still it affects the credit score. So you have to want to take care of that in advance. And number three is boost your savings. I wish we could say that you don't need any money to buy a home. But you do. You also want some money stashed away for a rainy day. So you want to be able to set a goal budget accordingly. And then number four is just knowing all those numbers together, knowing how they work together, understanding what you can afford based off interest rates, your income, all of those things put together. And then you want to get that magic piece of paper we call the pre-approval. That's going to give you the competitive edge that you need when you're home shopping. So you might say, well, I don't really want them to run my credit. I don't want a pre-approval. Well, it's actually very important that you get that for several reasons, but mainly you need to know what your budget is. You need to know how much money that you can borrow from the bank and how much you feel comfortable borrowing. They may give you more money than you want to spend. They may give you less money than you were planning on spending. So it's really important to have that piece of paper to know what you can do before you go out. It's like going Black Friday shopping without having any money. You're going to miss out on something really special. So you're going to need to get that pre-approval and you're going to start that process with your lender. And so I'm going to go ahead and just turn it over right now to Charlie. So he's going to explain a little bit about that process and tell you what it entails so you can get that lovely pre-approval.
Absolutely. On my end, so it's always starting with an application. We have to build a foundation of a file together so we know exactly how much you can actually afford to buy. So along with that application, which is just going to be your name, your social security number, birth date, your 2 years of residence history, 2 years at least of work history, and then we need some supporting documentation to back all of that up so we can show the bank that what we're saying is true. We'll need a driver's license and a social security card. If you are a W-2 wage earner, you'll need the last 30 days worth of pay stubs, as well as the most recent 2 years of W-2s. If you are self-employed, we'll typically need the 2 years of most recent filed tax returns. Any additional income you receive, whether it be alimony, child support, rental income from a different property, if this isn't your first time, we want to support everything that we put on that application with documents. And similar to that alimony and child support or even retirement, if you owe child support or you owe alimony, We definitely want to make sure we account for that because it will affect us as far as underwriting goes with the bank. And the last piece is going to be our bank statements. So we have to show the underwriter, the bank, that we have the money for our down payment. We cannot use cash, mattress money. I wish we could. It's actually part of the US Patriot Act. They want to document all dollars that you are using towards this transaction. And then obviously, as Kimberly pointed out, one of the biggest pieces of the pre-approval process is your credit. We pull on all lending institutions, we pull what's called a tri-merge credit report. So we all have three scores. We have Experian, Equifax, and TransUnion. For lending purposes, we always take the middle score for qualification. So if there's two people, maybe a husband and a wife, or a brother and sister, or even friends on the application, we take the lower of the two middle scores, and that's what we use for the qualification. And I like to say, not trust, sorry, credit is a lot like trust. It takes a long time to build it and you got to maintain it, but you could lose it all pretty quickly. So, a couple keys to credit, in my opinion, is always making sure at least you're making the minimum payment on time. You're never missing a payment. That's typically always going to be the biggest negative effect on your credit is if you miss or are late on a payment. But we like to say, live your life. If you're used to spending $1,000 on your credit card and you pay it off every month, keep doing that because that will improve your score over time. So I work as a wholesale broker. So I broker loans, my company, Prime Equity Mortgage, we broker loans to over 50 different banks. Every bank is going to be a little bit different in terms of their interest rates, their guidelines, how we get qualified, and ultimately their appetite for risk. So on my end, once we build that foundation of a file together and we know what we're approved for, we then want to figure out what loan program we're going to go with because there are different programs available. We have FHA, that's a government-backed loan. It's kind of like the government's version of a first-time homebuyer program. Your minimum down payment is going to be 3.5%. You can put more if you'd like. Your minimum credit score is going to be 580. You do have mortgage insurance. Mortgage insurance with FHA is for the life of the loan. So whether you put down 3.5% or 10%, you have the same mortgage insurance factor. It's kind of like a one size fits all. But I like to say no one keeps a mortgage for 30 years these days. It's a very older generation mentality. Pay off your home, pay off your home, pay off your home. You will pay off your home, but it's definitely not going to be with the same loan. Rates change every day. Something will happen in approximately 3 to 5 years. Maybe you sell that home to buy a bigger home. You'll get a new mortgage at that time, but your payments will always be fixed. You could have an adjustable payment, but that's kind of old school loan program. It's better to have a fixed payment knowing it's never going to go up. Just like rent goes up typically every year, we want to have that payment stay the same so that we're not, caught off guard. And then we also have a conventional loan option. That's very similar to FHA. The main difference is it is not government backed. Your mortgage insurance does go away once you reach 20% equity, or if you put 20% down, you do not have mortgage insurance. It's a little bit more strict in how we get qualified. So your minimum credit score is going to be 620 as opposed to 580 with FHA. But you can still put as little as 3 to 5% down depending on what county you are buying in. And then on the far right, you'll see a VA option. So anyone who's a veteran, thank you for your service. No one is more deserving of a VA loan than you. It is the greatest loan on the planet. You can put zero down. There's no mortgage insurance. And typically they have slightly better rates, deservedly so. So a lot of people often ask, what about down payment assistance or grant programs? We're going to dive into that in a second. There's one specific to Long Beach that's amazing. David, Kimberly, and I have used it with clients in the past, and it's an amazing program. But they do have other agencies such as CalHFA. That's the California Housing Finance Agency that offers down payment assistance if you qualify. I always like to say there's no such thing as a free lunch. So that money does have to come from somewhere. And what I mean by that is typically they will lend you that assistance. It's not truly free money, at least with the CalHFA program. But assuming you qualify, there are income limits and you have to be a first-time home buyer. But assuming you qualify, it could be a great option for you.
All right, and then I'll jump into this one. This is for the Long Beach grant program. I know we have some Long Beach people on the call. So just to point out, and Charlie had kind of talked about it a little bit, but this is a great program where we don't usually say free, but this is really free money that you don't have to repay. There are some things you got to pay attention to. One big thing is that you can use it for pretty much whatever. You can use it as a down payment, closing costs. You can use it to pay down points. So say the rate's a little bit high and you don't want that high rate, you can talk to Charlie, and then we can use that money to pay down the rate, kind of work with what's the best idea. But with that money, the big one is you got to live there for 5 years. That's not on this slide, but you have to live there for 5 years when you purchase the home. You also need to be you do need to be a first-time home buyer and in your family. So you want to pay attention to that. And then there's some documents you got to fill out. I've had some clients where they fill it. They're like, "Oh, there's so many things I got to fill out." Like, okay, it might take a couple hours. I'm going to be honest with you. It's going to take a little bit of time, and there might be a back and forth where they say, "Oh, we need one more bank statement. We need one more whatever." Just let Charlie will tell you. He does that too. That's part of the process. But with the city, they want to just they're giving you $25,000. So if it does take you a couple hours, I will happily do that for 25. I mean, I'll do work for $25,000 if you think about it. So just take the time to do that. And if you have any questions, let us know. If you go on, you'll see at the end on our QR code, but you can go to that website or maybe Kimberly, you could throw it in the chat so that they can see. If you go on my Instagram, it's on there if you click on the bottom. But if you go there, you can apply for it. It shows all the details. This is just a kind of a snippet of it, but these are the big parts of it. But I would highly recommend checking that out. And they could also tell you no. Sometimes that happens, or sometimes they just ask you a couple more questions. But again, well worth the money or the time to make money. And then also you're going to have to do this 8-hour financial education class. That one's kind of boring. The good thing is you do learn a lot from that. But like I've said before, I mean, for 8 hours worth of work, if you're making $25,000, yeah, I think well worth the time. And of course, after the call, we can go a little bit more in depth with anyone that has questions on that. All right, then the top 10, we're going to call it the top 10 mistakes before closing. This is a good one.
Yeah.
And then we'll take a break in just a minute to answer any questions too. But we have, first one is proceed with caution when you change your jobs. I mean, if you're going to change a job, if you're self-employed, or if you're going to quit a job, you want to make sure you have the keys to your home before doing anything like that. I always say if you're a nurse and you could jump from one hospital to another, that's fine. That doesn't really scare a lender as long as you have a job. But you don't want to go change from being a nurse to being a mechanic. Like those are completely different things, and that's going to, even though you might be making more money as a mechanic, that's going to scare a lender. Next one is don't buy a new car, or you may be living in it. That's an important one. You want to make sure if you have a car that works, then just stick with it. I mean, don't go out and buy that Lamborghini now. Wait till you get your keys to your house, then you could buy whatever you want. Don't use your credit cards in excess or let your accounts fall behind. That's something that Charlie talked about earlier. If you normally spend $1,000 a month on your credit card, you could still spend $1,000. That's fine. Just don't go and spend $20,000 because that's something that's going to scare a lender because it throws off your debt to income ratio. Next is don't spend money you have set aside for closing. I highly recommend setting it into a separate account. I like to call it my home account, my dream home account, whatever you want to call it. Don't touch this money account, whatever it works. You just want to make sure you leave that money because that is set aside for your home. In the middle of escrow, you don't want to be taking that money out because you need it. 5, don't omit debts or liabilities from your loan application. Charlie talked about this earlier too, where if you have any alimony or anything like that, then that's something you want to bring up to the lender. You don't just throw it on them at the end or just say, "Oh, I hope they're not going to find out about this," because they're going to find out, and you don't want to have them find out literally the day before you get your keys, and then that makes it where you can't get the loan for your home. So be transparent with that. 6, don't buy furniture or appliances until you own the home. With that, I've had this happen before where, well, it wasn't my client, luckily, where they ended up buying all this furniture and they were really excited, and that was in the middle of escrow. Because of that, it threw off their debt to income ratio and they actually didn't qualify for the loan. Luckily, in this situation, the seller did end up waiting for them. But all that to say, wait till you get the keys to your home, buy any furniture that you want, and then you'll be good to go. 7, don't apply for any new lines of credit or close any credet accounts unless discussed with the lender. Before you do anything crazy like that, just talk to Charlie, talk to your lender, and make sure that you can close that if it helps you. If it doesn't help you, this is kind of where you tiptoe along. Just make sure you don't want to ruffle any feathers too much. Next, don't make large payments or large deposits without first checking with your loan officer. So a common one with this is, say maybe you have a family member that wants to give you money. Your family wants to give you $20,000 for your first home. They love you. They say, Jorge, we really want to take care of you. Here's $20,000. Great. I would say take that money, up to you, but I would say take it, but you want to receive it in the right way. Don't just say, oh, here's thanks for the check. Let me put it in my account. The best thing to do is talk to a lender. They'll have your lender fill out, or have your parents fill out a form, and they're going to fill out this form, say, you know what, we're giving this as a gift to Jorge. He doesn't have to pay us back, and we love him, something like that. They don't need to add that I love you, but they can't. But I would have them do something like that so that it doesn't scare the lender, because the way a lender sees money coming into your account, oh, you got a loan from someone because you didn't have enough money for the down payment. So now you have a second loan, and then they think of who are they going to pay first? And my extreme example is, okay, your second loan that you got $20,000 from someone. Oh, that was from the mafia. And oh, who are they going to pay first? Are you going to pay this bank? Or are you going to pay the mafia that's going to break your legs? Again, extreme example, but that's kind of how the lender sees it. Like, they don't know where they are in that pecking order, so they just don't want to see it. So what you do is you just wire the money straight into the escrow account and then get approval first. All right, long story, but that's something that happens quite often. Okay, don't change or add bank accounts. That's another one of those things. Right now, you're just not trying to ruffle any feathers. Don't change anything, or else they got to dig deeper into that account, and it just takes more time. Don't co-sign a loan for anyone for any reason. With that, if you get say you have a son or daughter or whatever, and they need you to co-sign for them because they want to buy a new vehicle or whatever it might be, just right now I just say, you know what, Timmy, I love you, but no, not yet. Let's get the keys to our house, and then I'll do whatever. So just wait until you get the keys. Once you get the keys, you can do whatever you want, because the bank sees that as a liability. It's just like you getting the loan, even though you're just co-signing. It's just like you getting a loan. All right, that was a lot so far. We're about halfway through here. Any questions that anyone has? You can unmute yourself, or you could throw it in the chat and I can read it out. You could also just unmute yourself and say, you know what, we're learning so much and we love this call. This is great. That's also fine. There is one person that threw in the chat though. Can I use crypto? This is, I guess, more of a Charlie question. We get that question a lot actually, but can I use crypto to purchase a house?
Yes, in most cases you can, but just like your bank statements that we're going to ask for, if it's in dollars at Wells Fargo, for example, we're going to need to document that crypto. You can't just wire it into escrow and say, hey, this was my Bitcoin or whatever it is. We do need to document it just like dollars.
Cool. All right. Good question.
Great question.
Any other questions? Oh, we got one more. Sorry. Well, this other question is for Credit Karma. Is Credit Karma, is that a good way to just get your credit?
It's a decent ballpark of your credit score, but it is not the exact same algorithm that lenders like myself use when we pull your credit. We use what's called a beacon score. So we have as low as 300 up to 850. So long story short, yes, Credit Karma is a good gauge of where your credit is, but I've seen it many times where not everything that's actually reporting to your credit is reporting to Credit Karma. One thing that's happened recently is student loans are now back in full effect. They are no longer in forbearance. If that is you or sounds like you, I would immediately make sure that those are reporting as they should be. I've had multiple clients in the last month and a half say, oh, my credit's 740. I have great credit. And I pull their credit and it's in the 500s because they didn't know these student loans have gone back into effect. And now they have multiple 90-day late payments. And that will kill your score. So anything like that, always make sure you're staying on top of. Credit Karma, Experian, good ballpark idea, but not necessarily completely accurate.
Perfect. All right. Well, if we have no other questions, then let's jump along here. All right, a little bit about today's market. We're going to go into Long Beach 2 in a second because it's slightly different, but a little bit about today's market. You can see on here, these are mortgage rates. They fluctuate. They went up a lot in the 80s. It kind of goes up and down. Another thing I like to point out is pandemic interest rates. People always say, "Oh, I'm going to wait till it goes back down to 3%." You might be waiting for a while, and if it ever happens, we're not really sure. And if I'm wrong, then great. You could refinance and you make sure you get that 3% and lock it in. But I don't know if that's going to happen anytime in the near future. Maybe in 20 years it might happen, but I don't think anytime in the near future is my prediction. We also have single family and condo inventory starting to pick up a little bit, which is nice because we were so low in inventory for a while. Now we're a little bit more balanced, which is great. I also put in here the sideline buyers are starting to look again. And I've had this a lot. I know Kimberly has as well. And I'm sure Charlie can tell you the same thing. There's a lot of people that are like, oh, you know what? I've been waiting for a while. I think the prices are going to go up or whatever they think. They're just, okay, now's the time. I want to make sure we lock it in now. So I'm getting a lot of people kind of coming off the sidelines saying, you know what, I'm ready. Like, kind of like a turtle. They're just popping out. I want to make sure, is it good now? And then they're jumping into writing offers and, getting home. So, all right, homes are on the market a little bit longer. I want you to be aware of that. A lot of people, I've had a call literally yesterday about this where someone's like, oh, I see all the prices are dropping. I don't see that. There are some in certain areas that every area is a little different, but a lot of the market that we're talking about, closer to the coast, that isn't really happening. A lot of what we're seeing. So if you go on Zillow and you see, oh, the price just dropped, and it's this big red thing, and it's the market's falling apart. Okay, now pay attention to how long that home's been on the market. In a lot of cases, it's been on the market 30, 60, 90 days. And that's the reason why, because they just priced the home too high. Because everyone wants to sell high and buy low. I'm dealing with a client right now that wants to do that. And that's exactly what he wants to do. I want to sell my house here and I want to buy it for dirt cheap. It doesn't always work out that way, but a lot of people list their home high too because that's where they want to be. We could talk all about that later if you're looking to list, but I think that's something just worth paying attention to is how long it's been on the market. All right. Grants and down payment assistance programs are available. This is something that wasn't available during the pandemic. A lot of these programs, like this Long Beach grant program, wasn't available. And it's something that popped up because the government and say Long Beach saw that, okay, there's a need for this. We want to help out where we can. We got a little extra money. Let's throw it back into the housing market. And then another thing Kimberly just let me know about is they just sent out an email saying that, and Kimberly, you could chime in, that I believe it's September is when they
Yeah,
plan on cutting that Long Beach program. Is that correct?
yeah, actually, Charlie, who props to you for joining the Glasses Gang, my friend. Charlie sent me this email, so that's how I learned about it. So yeah, Charlie, if you want to talk about how it's ending soon, which is sad.
Yeah, so you'll notice when you go online to get qualified or get approved for the grant program through Long Beach, you have to be approved by a lender first. So hopefully you want my help, I'd love to help you, but whoever you work with from the lending perspective needs to make sure you're actually approved first. They're going to provide you documents you'll need to upload to the Long Beach grant program application. And it's typically good for, I think it's either 60 or 90 days, that approval, meaning once you're approved, you have that long to actually find a house and use that 25,000. But because it is running low on funds, which is, means a good thing, people are buying homes with it, it works, but you have until July to get approved. If you are beyond July trying to get approved for this money, you don't have to be in escrow or closed on the house. But if you are not approved for the grant by July, you're out of luck. You gotta either find a different grant program or just use your own money. So July.
Yeah. Okay. Thanks for adding a little clarity on that. And I'm with you. I like the glasses, Charlie. It makes you look smarter. And
Oh,
then
thank
I'm
you.
gonna be honest here. I have 20/20 vision. I don't even need these. I just use them so I look smart. I'm kidding fully. Okay, I do need these. So, okay, next, let's see. We have able to negotiate a sales price. So this is something I've noticed this a lot lately and I love this. So this house that's maybe it's a little overpriced and it's been on the market for a while. Then a lot of times what I've been doing lately is getting those accepted for lower, or we get into escrow and then we ask for a large credit because they know, hey, the house has been on the market for a while. This is our chance. We got to take it. And I've had this happen a lot lately where we do get a pretty hefty credit. In escrow I'm in right now, we got a $12,000 credit for things that weren't that big of a deal, but my job was to make them seem like a big deal. We have, oh, and then I like to point this out every time, is the best time to buy is when you're ready. And that's what I love about Kimberly and Charlie. We're never going to pressure you to purchase or, oh, you better buy now or you're never going to have a chance. The prices are going to skyrocket and then you're going to be left in the dust. Some people will say that, that's not something we'll ever do. Whenever you're ready, we're happy to help you. And whether that is right now in 2 months, 6 months, or in 6 years, we'll be around and happy to help. All right, just a real quick thing we wanted to go into Long Beach, LA, and OC market. I just took these this morning. So this is from, it's called Info Sparks, and I pulled it from the MLS. And just a little bit about, so these are new listings right here, and you can see this little scale. It's Long Beach doesn't look too crazy just because obviously we have less new listings, but you can see over here on the right side. So our new listings are down. We don't have as many listings in Long Beach this over the last year. And then I pulled this for the last 3 years. We have LA County. You can see they have a little bit of they have a, a good increase. Orange County, same thing. I also wanted to pull active listings. So we do have a good amount of listings, 24% up, which is good because we were so low on inventory. So that's good that we're kind of getting a little bit of an increase there. I think part of it is the rates dropped a little bit and then people kind of jumped up from that. We also have LA County and Orange County. Also, they have pretty big increase in listings. I also pulled the average days on market. This is, I think, is a really interesting one. We have Long Beach. Honestly, this is still, it's a little bit more normal now, which is good. We were so used to for years houses selling in 3 days or 7 days, which I will say my listings typically will sell in about 7 to 14 days, usually on the shorter side. But a lot of it is just pricing strategy. A lot of these homes that have been on the market for a while are just extremely overpriced, and that's why they sit for 90, 100 days. But just saying again, something worth looking into. And Long Beach is really big, just like LA County and Orange County. There's so many different areas, which when you guys are looking, we can dig into a certain specific area. Say, oh, I only want to live in Belmont Shore. Okay, let's look at that. I only want to live in North Long Beach. Okay, let's look at that. But I think this is a kind of a good snapshot to see where things are at. And this is more normal, is say like 35 days on the market. You can see LA County is the same, and then Orange County is a little bit lower. And then I will say just a couple things with the fires that were happening. That kind of changed a little bit around here because some people did jump to different areas and they weren't before. And I think that I noticed there was an increase in Orange County because of that, which I think was interesting. A lot of people jumped over there. Average sales price you can see here. Long Beach, I call that flat, but went down slightly. We have Orange County and LA County on there. All right, again, we can go in depth if there's a specific area. All right, and then Kimberly, if you want to jump into this one.
Yeah. So a lot of people ask, well, I know, I got to be ready when I'm ready, but how do I know when I'm ready? So a lot of it depends on, again, getting that team together, like we talked about, knowing your numbers. And part of knowing your numbers is knowing how much money you're going to need set aside. So this kind of goes over the money that you're going to need during the transaction. Number one is your down payment. There is a myth that you have to have 20% down to be able to purchase a home. That's not true. Now, does it help you financially? Of course, but you don't have to have 20% down. You can have 3.5%, 5%. Honestly, the majority of what we see is under 10% down when we're working with our buyers. I don't know what Charlie's averages are, but yeah, it's generally not 20 or 30 or 40%. That's nice, but not always the case. Once you get into escrow, you're going to have to spend a little bit of money on the transaction. That first thing you're going to spend money on is your general inspection. So inspector's going to come and they're going to look at the entire house, all of the systems, and give you a rundown of what's broken, what needs to be fixed, what might break in the next year or so. And then based off that inspection, you might have to have other inspectors come in, which will, again, cost money. But you're looking at around $400, $500 for that initial inspection. And then the bank is going to make you pay for the appraiser. So the appraiser is going to come out and give an opinion of value. That's going to be around $500 to $800. They're going to come out. They're going to be hired by the bank, but they're going to be a neutral third party just coming in to give an opinion of the value of the home. And then you're going to need closing costs. When you're purchasing a home, it's generally, even if you're using cash, it's a 10-day process, but normally for the rest of us, it's 21 to 30 days. And there's a lot of people involved in this process, and everyone is working. Everyone needs to get paid. There's a lot of fees and county fees and city fees and federal things. So you're going to need what's called closing costs to pay all of those things. And there's not an exact amount. You're going to use a percentage. It's around 2.5% of the purchase price that you're going to need to pay at the end of the transaction. So if you're putting, let's say, 3% down, you might need around 6% of the purchase price to be able to purchase the home. And then lastly, you might need to pay your realtor, because a lot of people don't know how we get paid. They're like, do we pay our lender? Do we pay our realtor? Where do we pay? Does anyone here know how we get paid? That's an interesting question. Well, I won't wait for you to answer. I'll just tell you. So we are not salaried. I don't get a check every 2 weeks. That would be cool, unless I'm just selling houses left and right. But we're not paid a salary. We're paid per project, basically per house. Just like other independent contractors, we're independent contractors, so we're paid per job, per house. And we only receive compensation if you close on your house. So if we look for 6 months and we see 100 houses, and then your great aunt dies in Michigan and you inherit her house and you move to Michigan, I don't get paid for any of that time. It's just the nature of our business. So again, you don't have to pay us until you close at the end of the process. And you're going to, at the very beginning, sign a buyer broker agreement stating that you're going to agree to work with me and only me, and I'm going to agree to do my best job for you. And we're going to sign that before we even start looking at houses. Now, I want to talk a little bit about some changes that happened last year, because you still might be thinking to yourself, okay, well, how much do I pay you still? I don't understand. Well, that's going to be clearly outlined in that buyer broker agreement that we're going to sign before we even go and look at houses. Typically, it's going to be a percentage, but we're going to go over that. We're going to agree to it before we look at houses. So that's very important. That agreement is going to show how my fee is calculated, what I'm going to charge, and that's set by me. My fee is set by me. David's fee is set by David, because we're independent contractors. Just like if you're hiring a dog walker, each dog walker might have a different fee, a different cost. Same thing with us. So we have that agreement. We're going to start looking at houses, and we're going to that agreement even if you happen to live in Michigan now and we're looking through FaceTime. It doesn't matter. We still have to have that agreement. You don't need the agreement if you're going to open houses. That's fine. If you're going to open houses by yourself, you don't need that agreement. So if you're a little too nervous to get started, you can go ahead and go to open houses without that agreement. And like we said, that agreement is a percentage generally, but we didn't really have an exact price on that earlier slide of how much you're paying your realtor, because even though this big change happened last year, we're still asking the seller to pay our fee. So typically we will write that in the contract. There's even a line that's already there in the contract saying, hey, Mr. Seller, we would like you, when you're selling the house to my client here, we would like you to pay our fee, which is X. We also, like David talked about earlier, we might ask him for closing costs, and we might ask for credits for repairs. All of those things are things that we're going to negotiate on your behalf during the contract process. I want to now change gears a little bit and talk about buying a new build. So maybe in Michigan, there's a lot of new builds. I grew up in Texas, and they're constantly building out there. It's like they never run out of space. Here in California, Orange County, you don't see a lot of new builds, but they are out there. And when you see them, a lot of people get really excited because they think, oh, I've never seen a new build. I want to go check out this new house. I'm just going to go on Friday after work, and then after I tour it, I'm going to call up David and tell him I want to buy it. Well, if you do that, David's going to say, well, good luck to you. I can't help you. It is very important that if you're going to go see a new build, you have to have your agent go with you, because the builders are going to have you sign another piece of paper. There's a lot of signing in real estate. If you're not there with your agent, that piece of paper is going to say that the builder is going to represent you. You can't have representation. And you might think that, well, that's fine because it's a new build. It's going to be perfect. What do I need a realtor for? It's not perfect. These houses are built quickly, they're built in mass, and there are a lot of issues that come up in the build process. You're going to need a realtor to make sure those repairs are done before you move in, any problems are solved. And also there is some negotiation that can be done on price. So make sure that you have your agent go with you before you see a new build. That way you're not left in the hands of the builder. You have someone advocating for you, which is really important.
Perfect. And then on that topic, I just a real quick story on one that I had recently where they, because I was able to represent my client, we were able to we got a lower rate for it. We ended up getting a large amount. They paid for all of there was solar panels that originally were needed to be taken on by the buyer. But when we did a little negotiating back and forth, they didn't love me. The sellers didn't love me, but my client did, because I ended up getting $18,000 for them to pay for the solar panels. And then there was a lot of repairs that needed to get done, even though it was a new build. there was some things that like they just forgot to connect something, and it's like, wow, that could have been a big thing. So yeah, so make sure you take us with you. All right, this is one that I like, the house hunting checklist. One thing you want to do is scout out the neighborhood in person. You want to check it out during the day and at night. I always say that's important because if you end up, let's just say you have a thing where you walk your dog at 10 o'clock at night because that's when you get home from work. Okay. Do you feel comfortable walking around that neighborhood at 10 o'clock? Also, maybe you park. Maybe you don't have a parking spot. You got a condo, no parking. Okay, great. But you park, you get home at about 7 o'clock at night, and check out the parking. What would the parking be like there? Like in Long Beach, I love Long Beach, but Alamitos Beach area of Long Beach, parking is horrendous at night. If you have a parking spot, that's a premium. You can also sell that home for way more later. But if you don't have any parking, it's going to be a big deal if you get home at 7 or 8 o'clock each night. You might be driving around for 30 minutes. So just pay attention to stuff like that. And again, you want to feel comfortable where you are. Consider nearby freeways, shopping activities, community amenities, all that stuff. So pretty much you're going to be living there. Is it an area you feel comfortable living in? Hey, you're going to be right by a freeway. Are you okay with the freeway noise? If you're right on the freeway, not my favorite, but some people don't care at all. Maybe they don't have great hearing and they're fine with that. Or they're right next to a mall. Okay, some people love shopping and it could be great, but there's also going to be a little more traffic right there. So just be aware of stuff like that. Another one I like to say is use your senses. So listen to things like I'm selling a house right now. We should be closing in about a week. Lovely home, but it is on the flight path of the Long Beach airport. So when a plane comes by, they're going to hear it. The house has dual pane windows. It's not that bad, but it's something that they're okay with. But it's something I would point out, and you want to pay attention to stuff like that. Also, I like to bring up smell in the air. I used to live in Ontario, which is right by like Chino, and there was literally there was well, I guess a cow pasture, and that was just on the other side of the street. It smelled like cow crap. It smelled like manure. And you kind of get used to it after a while, but at the beginning I was like, Mom, what did you move us to the sewer system? And again, we got used to it. It wasn't that bad, but some people would just not want to live by that. So be aware of stuff like that. And then we'll always point that out too. If we ever notice it, we'll just say, hey, Jorge, do you realize there's a plane above us right now? So just be aware of that. All right, next one is research accessibility for utilities. Electricity, if we're gonna buy a house in Timbuktu and say maybe it's not on the grid, be aware of that. You might need to get electricity, solar, you're gonna have to figure that out. Another one is sewer or septic. I think that's important in Long Beach or around our area. Sewer is the most common where it just goes out into the city line and then you don't have to worry about it. But there's certain areas, like say where my parents live in Ventura, they have this one little area where they just happen to be on septic. And it just dumps everything into the ground, and then and you have to pump it out, and it's a big hassle. But just be aware of stuff like that because that might be a deal breaker for you. Next one, you want to look at HOA. So if there is some kind of homeowners association, a lot of condos, well, I think every single condo I know about has some kind of HOA, but also some single family homes do too, depending on the area. So you want to be aware of that because some of them might limit different things you could do with your property. All right, another one I like to point out here is I know we're saying, oh, get an inspector, get all these people to come look at your home. Just know that we have all those people. If you have someone that you trust or, your cousin's an inspector, great. Or if you just trust, you have someone that's a contractor friend, great. I always highly recommend getting a real inspector that's certified in everything because they'll dig into everything. They'll go into the house. If you need more, typically we start with a general inspection and then we go into, oh, they called out plumbing, electrician, foundation. Then we'll get those other people to come out. We have all these people. So when we get to that point, know that we got a full list for you. All right, this one's my favorite page. This one is we call the Journey to Homeownership, where we go over the process from start to finish. This one's a little bit longer, but I think it's a really important one, so you know what to expect. Okay, so here up here you'll see, oh, happy couple, we're gonna go buy a house. Great. All right, you're building your team. You're on this call right now, so you have some great people that can help with that. You want to obtain a pre-approval, so you want to talk to a lender or Charlie and get started with that pre-approval process so you know how much you qualify for. That's really important. We're looking at something that's $1 million and you qualify for 700,000, that you're going to be a little disappointed when we can't write the offer. But for 700,000, we can get some nice things. All right, then we have sign agreement with your agent and then go house hunting. Like Kimberly talked about earlier, we want to work on that agreement. And then after we get that agreement, then we can go look at houses, and that's the fun part. All right, let's just say you find the home that you love. Then we walk you through the process where we make that offer. We'll write up the offer for you. We'll talk about strategy and how we're going to get that offer accepted. And then we'll walk you through the offer. Some agents will just send it to you and say, hey, sign it, and we're good. But at least Kimberly and I, we're going to make sure we walk you through each thing. Okay, this is what this means, and walk you down it's like 28 pages now. A lot of fun stuff, but nothing to be afraid of because it's something we deal with every day. So let's say we make that offer. There could be a counter offer back and forth. If there's multiple offers, we might get that. But let's just say in this scenario, we got our offer accepted, which we're good at that. Then that's this little star. So the star would be a good time to do a little dance. So we got our offer accepted. That's a good day. From there, within 72 hours, you're going to wire your earnest money deposit into escrow. So your earnest money deposit or your EMD, it's just showing that you're a serious buyer. You're putting your money where your mouth is. You're saying, you know what? I love this home. I'm going to give you between 1% and 3%, and which I always recommend 3 if you can. And then you give that to the escrow account. And escrow is a neutral third party. They're going to hold it in the bank account for you. It's not going to some offshore account or going straight to the seller. It's going into this account where escrow is going to just make sure that it is safe. From there, we are going to jump into our inspections. So there's 3 main contingencies. We have our inspection, appraisal, and loan contingency are the main ones. The first one's your inspection. That is your time to look at the property. That's where you get that general inspector, plumber, electrician, whatever. And we look at the property to make sure that that you know everything about it. Because you're going to be writing, you're purchasing a house for $600,000. That's not a small sum of money. So you want to make sure you know what you're purchasing. So we would have the inspector come out. Let's just say, for example, they say that there's an issue with the AC unit. Okay, that's nothing to be afraid of. It happens. The AC doesn't work. Great. Okay, we wrote an offer assuming that the AC did work. This is where Kimberly and I make our money, is we would try to get some kind of credit for that. And let's just say the AC doesn't work. I get an AC person to come out, and that's not worth it. It ends up being $12,000 to replace that AC unit. Then what we're going to go back and say, you know what? We wrote an offer for this. We assume the AC worked. It doesn't. We need you to drop down the price 12,000 for us to move forward because we thought it worked. Okay, great. So they could do that, which a lot of times they do, or they meet us somewhere in the middle. So they say, oh, we'll give you $12,000, replace it once you get the keys. Great, we're happy. It could be they meet us in the middle where they say, you know what? You pay 6,000, we pay 6,000, which is not a bad deal. You're getting a brand new AC unit. Or it could be that they say, you know what? Nope, sorry, it's as is house. You're buying it or not. That could happen. It's not as common. Typically they try to work with us, but that would be a chance where you could walk away too. You know what? They're not going to do that. We're just going to walk away and find another house. So that's an option. Typically they'll work with you, but in this scenario, let's just say yes, they said $12,000. Great, you're happy. All right, then you remove that contingency. The next one's going to be your appraisal contingency, and that is something the lender is going to require, and that just says the home is worth what you're paying for it. So this example, $600,000 house, the appraiser comes out and they give their opinion of value, and they're a neutral person. They just want to give you how much the house is worth in their eyes. So it appraises at 610. Great. That doesn't mean you pay more. That means you're happy. You have $10,000 in equity already built in, which is amazing. It could appraise at value, which is the most common. It appraises 600,000. Great. We can get our loan for a full amount. We're happy. It could appraise under though. Let's say it appraised at 590. In that situation, you're short by the appraisal $10,000. So that's when we work with the seller and say, you know what, we wrote an offer for 600,000. It's not worth that. The appraiser says only 590. We want you to drop the price or else we're gonna go find another place. Or they could say, you know what, we'll meet you in the middle or whatever. But a lot of times they will either drop the price or again meet you in the middle, and we could do that. Or you might say, you know what, I love this house so much. I don't care if I'm paying a little bit more than the current value of it because I love it. I'll just rearrange my loan a little bit so that I can make it happen. All right, let's just say it appraised though. We remove that contingency. Now the main one we typically remove last is your loan contingency. This is that one where, remember, you're a nurse and you decided, oh, I'm going to switch jobs in the middle of escrow. Not the smartest thing, but if you did something like that, or say you lost your job in the middle of escrow, that's why you have this loan contingency, so you have a way out. Say you lost your job and Charlie's like, hey, you lost your job. We can't give you a loan anymore because you don't have a job. We don't know if you're going to repay us. That would be one of those where you say, you know what, fine, we'll just cancel and we'll get our full earnest money deposit back. Or maybe you get another nursing job and then Charlie says, hey, as long as I get this paper that says you're hired, we're good to go. Which is that's happened to me before where the client did lose the job, they got another one and it all worked out in the end. Okay, so once you say that all works out, you're happy, you remove all contingencies. Then you remove them all. Then your earnest money deposit could be at risk. That's typically for about 5 to 7 days. So it's not that much time, but just try not to lose your job or buy that Lamborghini during that time. Shortly after that, you're going to sign your loan docs. That's where you wire the rest of your deposit. And then back to the earnest money deposit. Let's say you did 3%. Your total deposit is going to be 10%. You're just going to come up with the additional 7%. Your EMD is part of your down payment. So you'd come up with the additional 7% here. Shortly after that, we record with the county, and then that's another dancing moment where I get to hand you the keys to your home, and we get to take that picture if you want with that sold sign. It's always fun. All right, I know that was a long one, and every time I see steam, no one on here has their camera on, so I can't see the steam, but I know it's there coming out of your ears. But no, this is something we deal with every day. That's why we could just rattle it off because we deal with it every day, and we're here to hold your hand through the process. All right, speaking of holding hands through the process, this is a lovely couple that I helped. Know that you can look at a lot of different reviews. Go on Google, Zillow, Realtor, Yelp, go wherever you want. And you'll see there's a lot of reviews. You can look under me, type in David Sanchez, Realtor, or Kimberly Smith, Realtor. You'll see a lot. These are just two of them. And this is one lovely family, which this is a home that was flipped. It looked great. But we were able to negotiate a lot of stuff with them because we found under the house there was some minor issues, but my job was to make it seem like a bigger issue. And they actually had no closing costs in the end because we negotiated a credit for that, and they qualified for some LA County grant. So they were really happy here because they didn't pay much for it, and they really got a great home. Yeah, but check those reviews out. All right, one thing I always like to say is keep learning. You took the first step by being on this call, whether you're ready right now or in the future, but you kind of hopefully have a better understanding of what it's like to purchase a home. And that's why we do these calls. We did this right now, the first time homebuyer seminar, tax benefits. That's that one we were telling you about. Kimberly was saying with the CPA, that's a really good call. And you could learn about different tax benefits for homeowners. So it makes a big difference there. We're not in a crazy bidding war situation right now, but I do this call, which I love winning in a bidding war because there's a lot of fun tactics there that I can nerd out on a while. But that's coming up. We also have inspection deep dive where I get an inspector to come out. We kind of talked high level on what that is, but I like to have the inspector come out so people know what to expect. Some people want to know before they get there, okay, hey, what does this inspection thing look like? So that's that. You want to scan this QR code. It's a great way to do it. And then in a second, we'll have Kimberly's QR code and you could join her group as well. We're going to be posting it all on here though. All right. And then speaking of our local community, I know you're on it right now, most of you. I know we had a couple of people join from Eventbrite, or you joined from one of my groups up here, or Kimberly's group. And know that if you're trying to purchase a home, this is a great place to be. Or like say you're moving to Long Beach and you're new to the area. I've had a lot of people that, hey, their first week there and they join one of my groups and then they just really learn to love Long Beach and its community. But make sure you join us on like a happy hour, speed dating, beach cleanups, a lot of different things we do with that group. Clearly, this one's golfing. We have a golfing event coming up in Long Beach on Wednesday, actually. And then we have a paddle group where we go paddleboarding out on the Naples canals and around the area, which is fun. And then also this entrepreneurs group. I really love the community that we built. And I have a friend that he's an artist and he's an entrepreneur. So we came up with this entrepreneurs group. So anyone on the call that is an artist, that's an entrepreneur, want to build that, or they're just artistic and they want to talk to artistic people, that's a really cool one to join. And then Kimberly, if you want to talk about your groups real quick.
Yeah, I have two groups. The two ones on that bottom edge there, the Furry Paws and Big Hearts. It's just a dog meetup group. So dogs of any sizes, as long as they're nice, we do different things in and around Long Beach. And then Long Beach alcohol-free activities and adventures. It is again weekly events all over Long Beach. You don't have to be sober to join the group. You just can't drink while you're at the group. So we have people who are sober, people who drink, every night except when they're with us. And we do all different things all over Long Beach. So if you name it, we've probably done it, from hiking to axe throwing to paddling on the little bikes on the water. So all kinds of fun stuff's there.
Perfect. All right. And we're wrapping up in just a couple more minutes and we'll get out of here. But again, if you guys want to join these groups, that would be great to have you. And I want you to know, I promise we don't talk about real estate on all these. Unless someone asks, of course, we'd love to talk about it because we love it. But there's no high sales pitch in any of this. It's really just to build community and, and we love our community. All right. Any questions that anyone has? If you want to, and if you go on this, Kimberly and I can both help you with this as well. But if you scan that QR code, you can go to Calendly. You could schedule an appointment, and then we can both help you out with that. And we have a seller strategy consultation or a buyer discovery call. And this call, since there's multiple people on it, we can't really ask you that many questions because I want to know exactly what you're looking for. But if you want to do that, you can contact us, and then we can dive a little deeper. But any other questions for now, and then we'll give you our info. If you guys want to say something, feel free to throw some questions out, but I'm just going to move to the next slide. All right. Well, if you guys want to unmute yourself or throw it in there, that's fine. But I do want to make sure that we get to our info. Again, my name is David Sanchez. You can pull up, that's my phone number on there. This is a good page to take a picture or a screenshot of, or if you have your phone with you, you can go to your camera and then scan the QR code. This is for Instagram. If you're in Instagram, or even if you don't have Instagram, you could view a few videos of ours and you could see a little bit about us. You could learn a little bit more about our personality, maybe a little quirky, but you learn about us, and you also learn that we know a lot about real estate, and we like to share and educate people. And then we also do a lot of stuff with the community that we love. And then Kimberly, if you want to say something.
Yeah, so same thing. I mean, I would love to connect with you. You can text me, call me, you can follow me on social. You can communicate with me over there. Any questions, I'm always open to answer them. Yeah, would love to help.
And I will
Great.
echo that. Thank you all for being on the call. I know it was a lot, but I hope it was insightful and helpful. That's my cell. I'm not big on Instagram, but that's my cell phone. If you need anything at all or just want to get the process started, I'm here to help.
All right. Well, thank you everyone for joining. Greatly appreciate it.